Hello everyone, thank you so much for joining. A very warm welcome to all our investors joining us today. Thank you so much for taking out your valuable time and to be part of this webinar hosted by AltPort experts. So this webinar will be hosting by Mr. Dilpreet Singh, right, sir? Welcome.
Yes, Dilpreet and Malaya.
Yeah, Dilpreet and Maria. So thank you so much for joining. Dilpreet sir brings over 15 years of diversified experience spanning strategy, digital information, leadership, and growth initiatives. So throughout this professional journey, so he has worked extensively on building scalable businesses, during driving innovations and creating meaningful impact across industries. So uh, today, we are delighted to have him with us to share his perspective, experience, and actionable insights. So please join me in extending a warm welcome to Mr. Dilpreet Singh and Malayji. We are excited to hear you and look forward for an insightful session, sir.
Yes, thank you, Shubham. We look forward to as well.
Yeah, sir. So basically, just wanted a brief about your product and what are your views on the current market and how you're looking towards it.
So I can start, and Dilpreet, please, join in. So firstly, again, thank you, AltPort Experts team, esteemed guests on the call, for giving us the opportunity and continued partnership with Singularity Asset Management Company. Um, Singularity Fund of Funds too, which we are discussing, which the team has been discussing. This is a very unique opportunity in the category to AIF, uh, a fund which invests into uh, a very, very good top quality fund managers across sectors and stages, which would be about 60% of the portfolio. 40% of the portfolio we would invest into direct secondaries and co-investments. Today, Shubham, so the problem statement, or rather what we are doing unique or differently over here is, for an investor who wants to commit 1 crore of rupees or more, but does not necessarily uh, uh, want to allocate to different individual fund managers, and also have a separate pool of capital earmarked for direct secondaries and co-investments. This is one fund under which an investor will get an entire holistic exposure to the private equity and venture capital ecosystem, getting exposure to some really, really top quality, track record based fund managers, and direct co-investments within their portfolio companies and direct secondary transactions, all under one fund, all with a commitment of 1 crore of rupees. As we speak, we had launched this fund in April 2024. As we speak, the fund has completed 2 years, over 2 years in the life cycle, and we will close this fund in September 2026. So roughly about 2.5 odd months before we close the fund. We have already completed our primary portfolio allocation, which is about 60% of the portfolio, as you can see on the screen, which is into 12 underlying funds, which is giving an investor an portfolio of north of 100 companies. As we speak, the fund is at 42% gross IRR. We are allocating units at par, which is at 10 rupees per unit in this fund, and fund is at a 1.3x TVPI, which is total value of the paid in capital. Like I mentioned, the final close would be in September 2026. An investor getting this entire spectrum of top quality fund managers and investments in the PEVC ecosystem will be paying a management fee of 2% per annum, which includes the underlying fund fee. This is a very important point to note that these 12, 13 funds where we have invested in, most of them would have same or similar pricing, like Singularity Fund of Funds too. We are directly passing on that pricing to the investor. We are not charging a double fee or anything extra over and above what the investor pays in the form of management fee of 2% per annum and a 20% performance fee, which should be over a 10% hurdle with catch.
Okay.
Yeah. You want to move on to the next slide? Do you want to add anything, Dilpreet? Yeah.
I think you've covered everything, the USP, what's the selling point, the management fee, performance fee, and maybe we can also mention the skin in the game. How much the
Yes.
sponsors also put in.
So this is a 400 crore fund and a 100 crore green shoe, so total 500 crore fund. As sponsors, the family have invested 60 crores, which is roughly 15% of the total fund as their own skin in the game. Vis-a-vis 5 crores, which the SEBI mandates the sponsor to invest in the fund. I would request Dilpreet to run the team and the guests on this call through the next couple of slides, which will talk to you about these very differentiated funds and fund managers we have invested in, and their examples of few of their underlying portfolio companies which have become clear breakout funds and companies within this portfolio. Dilpreet, over to you.
Thanks, Malay. Thanks for those words. Everyone who's here, I'll just walk you through how the primary allocation of the funds has happened. And if you guys can see the screen, we've bifurcated into broadly three stages of investments: early investments, continuing investments, and mid-market. Early is anything that is, very early on pre-revenue, or where there's no traction, there's no product market fit, it still has to be discovered. So in that sector, in that stage of investments, we've selected four funds. We have Atomic Capital, which will primarily focus on consumer. Atomic Capital was started by Apurv. He is a VC in an operator play. He works with the companies and makes sure that if there's anything that needs improvement, he works closely with the founders, has weekly meetups, see how the entire VC, all his investments, work out. उसके बाद we have Special Invest, which is a Chennai-based fund. It invests primarily into deep tech, advanced manufacturing, and B2B enterprises. Special thing about Special is they have it is very difficult to get an allocation in funds like Special because it was not open. It's a very limited capital size, and we only got virtue of our network with Mr. Yash Kela and Mr. Madhusudan Kela. This is one of the funds that we are very excited about because the first fund has returned a 10 times MOIC and they've already delivered 2 times DPI, and they have a residual value of 8 times. So if you invested 1 crore, they've already returned 2 crores to you, and they already hold another 8 crores in their first fund. And the second fund is trading at a 4 times MOIC. So on the same trajectory. And we expect Special, the third fund we invested in, to have the same trajectory. After that, we have a fund called Advantage. This is their third fund. They focus on energy transition and mobility. And Advantage was founded by Kunal Khattar. He is the son of Mr. Khattar, who is the founder of Maruti Suzuki. And this is very early on. They have not yet started deployment. They've only made 1 year. They've only made one investment in a Exponent One. Apart from that, they're still very early on. They're finding the opportunities. But they were very early backers of companies like Rapido, Namayatri, and you guys have seen how they've scaled till now. Fourth early stage fund we've invested in is Singularity Early Opportunities Fund. It is a sector agnostic fund. We invest in early companies. This is an in-house fund. It is Singularity's own VC fund, which was not provided access to public because the idea was the money that was in the fund is mainly prop capital. we were not allowed LPs from outside. But I believe now with this fund, we decided it was a good time to give allocation into such funds. Uh, yeah. And then after that, we have continuity. Continuity is the second category of late stage, second stage of investments we've made. It's basically companies that have already become winners, and basically the fund is decided to keep backing them till the entire life cycle of the company. From Source, we have invested in two funds, the Source Continuity Fund 1, Source Continuity Fund 2. The idea of Source Continuity Fund 1 and 2 is very simple. The investments that they made in VC, the first and second VC funds, they will keep backing till IPO, till any kind of acquisition, or till they find a sale. And very notable names is you have Innovest, you have Mokobora, you have Whole Truth, you have XYXX. These are household brand names, new gen consumer names. And Manu, the founder of Source, has a knack for finding these kind of disruptive consumer brands. And one very recent news is Innovest was recently acquired by by L'Oréal Paris, a global BPC player. And there's also traction for other. So I will go through the portfolio one by one, and then I'll show you how it's transformed so far. We have Titan Capital next. Titan Capital was started by Kunal Bal, Rohit Bansal, household names after the exit in Snapdeal. They are also very prolific investors in VC. They've made multiple investments. Urban Company, they were the first ones to put in checks. And Titan Capital will back any of the investments that the prop money has done. And every time one of the prop companies in the portfolio of Kunal Bal and Rohit Bansal raises capital, Titan Capital will put in more money and they will double down, and that becomes a continuity fund. After that, we have Yali. Yali is a deep tech focused fund and advanced manufacturing and B2B enterprise. Mainly invests in Many invest in companies that are doing something innovative, anything that R&D, semiconductor, AI applications for cancer treatments, AI for early signals of identification of cancer. And that is a few of the companies that invested in, started by Ganapati and Matthew Syriac. Matthew Syriac is ex-Blackstone head of India. He runs Florida Advisors as well. He's done multiple deals. Notable is Idea Forge. He's incubated the investment all the way to IPO. After that, we have Iron Pillar, which does B2B enterprises. So they've almost deployed. I think they have one or two investments more to go, and they'll be fully deployed. So far, the traction in Iron Pillar has come from a company called ToneTag. It is a contactless UPI payment system, which is very interesting. And iske baad, the third stage of investments we made is in mid-market. What does mid-market mean? Mid-market is anywhere between growth and pre-IPO. Most of the companies are either filed DRHPs or will file DRHP in the next 12 to 18 months. And one notable investment I would like to actually point out from Exponentia is Cedimac. The fund size is 1,000 crores, and Cedimac will, as per its current trajectory, will return. It's already at 8 times MOIC, returning 800 crores out of a 1,000 crore fund. Next slide. So out of the
Just
12,
to add over here, Dilpreet, sorry, is on the previous slide is that an investor is getting access to an early stage consumer to a tech fund to a continuity, which is a winner fund, all the way to your mid-market growth segment, which otherwise investor, investing individually comes with its own risks over there.
so I'll take it over. So out of the 12 funds we've invested in 11 IMs, you can see that they have invested in 106 portfolio companies, which we have mapped out for you based on their stage and which sector. From financial services, consumer healthcare, new economy, advanced manufacturing, energy transition, and B2B enterprise. I'll also show you out of this 106 entities, we have already gotten a positive MOIC on almost 30 companies. And we have mapped out based on the MOIC on the bottom axis and which financial year they've invested in. And you can see companies like Whole Truth, Soulstore, Mokoboro, Innovest, Forbes Care, these are already trading at 4 times MOIC. Now I'll come to the performance. This slide shows the exact performance, where we are. We're being completely transparent. how much commitment, how much is being invested, part of the commitment, balance, how much we have paid, what is the current value, and the IRR. And if you can see, if you can notice that Atomic, India SME, and Yali, these are slightly bigger checks, is because a retail investor cannot get into these. You need to be a part of a like a consortium. They take only check size above 10, 15 crores. And this was very limited access, and we were able to get it. And apart from that, we have obviously warehouse funds, which will be transferred part of the holding, Advantage, INTL, and Client Associates. And on the right side, you can see the 106 companies. And on volume basis, 42% of them are parked in consumer, healthcare, new economy, 23 in financial services, 16 advanced manufacturing, 14 in B2B enterprise, and the balance in energy transition. This is again, most of the funds are still early deployment. Some of them are fully deployed, and we will see a change. Current gross IRR on the holding book is 42%. TVP is at 1.3, 12 funds across five major sectors. Malay, I'll let you speak on the cash flow.
So we have created an illustrative investor level cash flow where this is a fund where the minimum commitment is 1 crore, which will be drawn down with an initial drawdown of 40% and the balance drawdown over the next 2 to 3 years. So that is how the illustration is represented vis-a-vis the potential distributions the funds will make as a result of exits of their underlying investments. So assuming you as an investor is committing 1 crore today with an initial drawdown of 40%, the next 20% will happen approximately between December 2026 to March 2027. FY28, we will call for another 20%. FY29 and FY30, we will potentially call the balance 10 to 20%. As you see, the distributions an investor starts receiving, which is from the fourth year or the fifth year onwards, is what the fund targets to achieve. It turns positive cash flows to an investor when you see FY29, where an investor is paying a drawdown of 10 lakh rupees on a 1 crore commitment, but is actually receiving approximately 17 lakhs as distributions from the fund. So the investor is net 7 lakhs positive. This is a very important point to note here, friends, is that typically a early stage or a private equity venture capital fund, distributions are done towards the end of the fund tenure in the later part of the years, which is something which we wanted to solve for, which comes from the balance 40% portfolio, where we are directly investing into companies, which is secondary transactions, and where we are doing investing in the underlying funds, co-investment opportunities. These investments come with an average investment tenure of 3 to 4 years. And as and how we exit these investments, the distributions will follow. So that is the way we have structured the fund, wherein we are able to target to start distributing cash flows to an investor.
And just one more point to add on that, Malay, the net cash outflow for an investor will only be 70% as per our estimates. By the time the underlying funds start giving out, the LP will only be out of pocket by 70% of a 1 crore commitment.
Correct.
We will go through the underlying funds. I mean, we can go through them. We can show you what investments they made, where the value is sitting, and where further value we see further value. If that's fine, Malay?
Yes, so we can touch upon maybe a couple of funds and a couple of transactions. Mainly if we can focus on the breakout companies, consumer or defense or tech. this is something where investors on the call would resonate and relate.
Sure, Malay. So we'll go one by one, and I'll try point taking out one or two winners or breakout companies from each fund, where we see there's further upside. And for the first fund, as you can see, this is Atomic Capital Fund, started by Apoorv Gautam. Very early investments in VC companies, primarily in consumer. Within their portfolio, the winner is very clear, Conscious Chemist. It is a BPC. They've entered at a 54 crore valuation, and it's currently they've done another markup around at 117 crores, and they've revalued at 207 crores based on the performance. And at their last, they're at 100 crore ARR, showing a 200% growth year on year. Atomic has, on an overall basis, they have deployed 91 crores and it's already marked up to 148 on a fund level deployment, which is a 1.6 MOIC. This MOIC has not been factored in to their NAV. The IRR you saw 40% is because they wanted to wait for the audited financials before giving a NAV. So that is a further upside on your investment on your NAV. After this, we have Special Invest, the deep tech based out of Chennai. Started by Vishesh Rajam. This is his third VC fund. Within this, you've already seen as early as September investments in H2 Loop and Unmanned. You already see traction. Both the companies have raised capital at a 300 crore post-money valuation, and you can see the uptick in both. H2 Loop is a ALS software. They work on that. And Unmanned is advanced manufacturing tech. They basically prepare defense, which is based on AI. Like this, not even unmanned. The defense equipment that they will do will be monitored by AI or be worked on by AI. The next slide, we have Source Continuity Fund. Consumer, we see it's a continuity fund which primarily only invests in consumer. We have Manu Chandra who has founded this. He has three VC funds. He has two continuity funds where we have both exposure to. Idea of putting money in continuity fund is basically, there is no risk. And as you can see the portfolio, there is not a single investment that is down or even at cost. Hokko, Supertails, Innovis, Mokobora, XYXX, and Whole Truth. All of these are known brands. All of these are products that all of us have used. Source is very clear in his thesis, new and disruptive consumer brands, and that is what he has delivered. And within this, Innovis is a standout breakout company which would return the entire fund. Currently, they're holding the value of the investment 33 crores at 146, which is at a 3,000 crore valuation. But recent news suggests that L'Oreal Paris has taken a majority stake in the company at a 4,500 crore valuation. So on a 4,500 crore valuation, the fair market value would be around 200 crores. The fund size is around 260, so almost 80% of the fund has been returned by this one investment alone. Next is Exponentia. Exponentia, multiple multi-baggers. You have Cedimac, you have Oxelo, you have Solsto. And one thing I will actually touch upon is Cedimac. IPO happened a few months back. The cost of Cedimac for Exponentia is around 340, and its trading price is around 2,900 crores. It's 2,900 rupees per share right now. And at today's price, the TVPI for this investment for Exponentia is close to 8 times. They've already realized their cost, 122 crores invested, 140 has already been exited IPO, and the remaining profits that are being carried on or being riding on, it's valued around 700 crores as on date at a 2,900 crore per share. Next, we have is Titan Wind, Titan's Capital Winner Fund. This is started by Kunal Bal, Rohit Mansal. Multiple up rounds have happened post their investments. Faye Beauty, Mobile, Mecca, Zook. In fact, in the last 2 weeks, there are two other investments, Mitigata, a cybersecurity company, and Unvision, a dairy, I think dairy products, they make ghee and all raised capital between 150 crores and 15 million. Unvision has raised 150 crores and Mitigata has raised $15 million. Next, we have a Singularity Early Opportunity Fund. We have very early, we've invested in this a few weeks back, so there's not much traction. The valuation is happening, and by the time the valuation comes out, we should see uptick in almost all the companies. Primarily, three companies that are standout. InstaAstro is doing 150 crores ARR. They're raising another round at a post-money valuation of 500 crores. Legend of Toys has done a pre-series A round, which is 6 times our entry price. And Sunland, a defense company, which is already clocked in 124 crores of revenue in the last financial year. And next, we have India SME. India SME was started by Mithun Jain, his second fund. First fund is trading at 2 times MOIC. It's performing very well. Third, this is the second fund. The outliers here are Credit B, Integris, Manipal, Pontica. Most of the companies in the portfolio already going to file DRHP or will file DRHP in the next 8 to 18 months. Manipal, Integris, TMC, and Credit B are already in the preparation mode. Next, we have Yali Deep Tech. Yali Deep Tech, two companies immediately stand out. C2I Semiconductor, which does fabulous chip design. And we have Phobase Care Precision Health, Life Sciences. They use AI to identify cancer cells. And both the very early investments by Yali at 100 crore, 150 crore valuation, don't quote me on this. And both of them raised value, or they've raised another round on 6 to 700 crore post-money valuation. And apart from these two, we also have a company called Tombow Imaging India. It does aerospace and surveillance. It has night defense tech. It has night ops, all of those equipment that the army uses. And they are filing for a IPO round, and they will do a DRHP. They will file the DRHP in the next 8 to 12 months, and then will skip that IPO. Source Continuity Fund 2, same as Cost Continuity Fund 1, same investments. I'm now going to go through them. Next. These are the warehouse funds where very early investments, not a lot of investments have been made by the underlying funds, and we're still waiting for the traction. Notable is Tone Tag in Iron Pillar, where as soon as these guys have put in money, Qualcomm has already put in a further round at a 1.25 times their investment. And I think this concludes all the underlying investments. Malay, if you have anything to add.
Yeah, no, so I would like to, summarize that this is a category 2 AIF giving the opportunity for an investor by committing a minimum of 1 crore and getting exposure to some really, really good fund managers into some great businesses and getting exposure to direct secondaries and co-investment transactions all under one fund. As we speak, as of 31st March, the NAV of the fund is about 12.5 rupees. We are allocating units at par, which is at 10 rupees, which means that investor investing today is approximately 25% on day one in the money. Fund is at a 42% gross IRR. There is no double charging on the fee. This is a category 2 AIF, which means the taxation is passed through in the hands of the investor. Since majority or most of the investments in the fund would be classified as long term, the taxation would be long term capital gains, which is 12.5% plus cess. So that is how we have structured the fund, and this is the strategy and the portfolio. An expected return an investor should expect is a gross of 25 to conservatively 25% or more IRR on investment in this portfolio. Shubham, maybe we can take a pause.
Yeah,
If there are any questions, happy to, you know.
yeah. So first of all, thank you so much, Dilpreet ji and Malay ji, for showing us all the
Thank you.
product and insights about the product. So I would request all the investors if you have any question, please raise your hand, or if you have any question, you can just drop in chat box. So meanwhile, I have one question, sir. So how does this fund differ from the previous fund in terms of strategy, sectors, and target returns?
Can you be more specific when you say previous fund?
This is fund 2, right?
So I'll take a step back. Singularity is founded by Mr. Yash Kela and mentored by Mr. Madhusudan Kela. We started our journey back in 2016, where the family invested a large corpus into various unlisted private equity venture capital funds and direct investments and co-investments. That is an undisclosed pool of capital. That is what Singularity Fund of Funds 1 is. Where I would say the differentiation over here is this is more structured portfolio and focusing on these five or six sectors, namely energy transition, new age manufacturing or industrials, healthcare, pharma, consumer, financial services, and tech, emerging tech. Um, uh, these are the sectors where we have a deep focus on. And as you have seen in the presentation, how we have allocated, capital to different sectors and funds. That is one. Fund one is tracking a 21% approximately IRR as we speak.
Okay. Okay. So, if you have any questions, you can just drop in the chat box.
We will be closing this fund in September 2026.
Okay.
So which is approximately 2.5 to 3 months from today.
Okay. Okay. Got it. So, what are the key risks investors should be mindful of before locating the capital?
So this is an unlisted private equity venture capital fund. So by that nature of investment, equity comes with its own risk. What we are trying to mitigate over here to the best possible capability, experience, the senior leadership team and the investment team which we have at Singularity is to identify uh, uh, good fund managers and transactions which are aligned with the sectoral tailwinds which today the economy has in the sectors which I told you, um, and going bottom up to identify these investments and transactions. But yes, Shubham, this is fund of fund category 2,
Yeah.
which
Yeah.
it is investing into the unlisted ecosystem. So yes.
So, according to you, which investor profile is best suited for this opportunity?
So investor who has patient capital. This
Okay.
is a 10-year fund from April 2024. It's a close-ended fund, uh, which means that there is no exit in the interim. So investor who has patient capital, looking to compound and create wealth, with the risk a PEVC fund brings, would be an ideal investor. Also, an investor who wants to participate in the entire private equity venture capital ecosystem, but does not want to take a risk with one particular fund manager or two, or do a secondary unlisted investment into one, two, or three individual companies. This is a very ideal fund in that sense because there is a good amount of diversification. As you can see on the screen, we have invested into 12 funds, which has exposure across 5 to 6 sectors and a portfolio of 106 companies.
Okay. Okay. So,
Malay, there
I
are
have
a few
questions.
questions.
Yeah.
Yeah.
Yeah. So, one of my investor Prakash ji has asked, why is the investment done into so many funds? Will that not be too much diversification? Why no limit to only 3 to 5 funds? So this question was asked by Prakash ji.
I think in the previous comment, I mentioned that this is, we don't feel it is too much diversification because as you can see, in the previous slide, how different early stage, continuity winner fund, mid market, growth, and late stage. So we have diversified the allocation to these different investment stages, And we have invested and we were looking to invest into these 5 or 6 different sectors. So we feel it is a good diversification and not concentrating with only select 3 or 5 funds. Hope I have.
I hope, Prakash ji, your question is answered. If you have any question, please raise your hand. Other than this, I will just unmute yourself.
So the next question I can read in the chat box is, what is the total term of the fund? So we launched this fund in April 2024. It's a 10-year fund with +1 + 1 extendable. Um, uh, that is the total tenure of the fund.
Okay.
What are the risk
Yes.
factor investors should take? I think, Shubham, you had asked the same question,
Yeah.
which I have answered. Happy to reframe if required. Uh,
What
Another
is the
question,
minimum, maximum
what
IRR
maximum
investor can
investor can
accept?
expect?
Yeah.
So obviously it's equity, unlike a fixed deposit where you are getting an exit rate of interest per annum, but here an investor can expect, and how the fund and the fund manager and the investment team is targeting to achieve over here is uh, a gross IRR of north of 25% is what we are targeting to achieve by investing in this fund.
So, there are no more questions. So if you want to add anything from your side, sir, you can just add any final remarks from your side.
Yeah, I think from my end, and I let Dilpreet as well speak, but I think for an investor, again, I will reiterate, for a 1 crore commitment, investor is getting a good exposure to some really good investments in the entire private equity venture capital ecosystem through various fund managers, plus direct secondaries and co-investments. A fund which is having a drawdown based structure of investing and not the entire sum on day one. Um, uh, this is, I think, from my end, a very, very unique opportunity to participate in the PEVC ecosystem. One should look at. Thank you.
Thank you, sir. Yeah, Dilpreet, any final remarks from your side?
You're on mute.
Yeah, nothing from my side. Whatever I wanted to say, I believe Malay has already covered it. Everything, whatever the value add Singularity does, the opportunity that lies in front of you, and why this opportunity is unlike any other fund of funds. So, I mean, if I have anything, nothing from my side. Shubham, thank you. Malay, thank you for taking us through this entire thing. I
Yes,
believe
thank
there is
you.
a question from Prakash again.
So, Subham, one thing I would say that Singularity, like I said, is founded by Mr. Yash Kela and mentored by Mr. Madhusudan Kela. As we speak today, Singularity, we have successfully closed 2 private equity funds in the past. We are actively, having one more side sleeve private equity fund focusing on 2 sectors and a pipe strategy. Apart from the fund of funds too, which we are discussing today, which is a 500 crore fund. Um, we have a team of 60 to 65 people, out of which I would say approximately 50% or more of our team are just investment professionals, all the way from senior leadership, Mr. Madhusudan Kela, who is the chairman of the investment committee, Yash Kela, who is the overall CIO, independent co-CIOs for the pipe strategy and the private equity fund. We have operating partners across these 5 or 6 sectors which I mentioned, and we have a senior external industry leadership. These are very, very senior industry stalwarts, who acts as advisors, where to whom we reach out to for guidance, mentorship, um, any queries, or assistance we would require. And then we have the entire layer of fund managers and the senior investment principals and professionals, analysts, at Singularity. So very, very aligned, um, uh, primary research-driven investment thought process with a top-down view where there are sectoral tailwinds and bottom-up approach of identifying some really, really good investments and fund managers. So that is who Singularity is and how we are growing with you in this investment journey.
Yes, sir. Yes, sir. Thank you so much, sir.
Thank you.
Yeah, I think so. Prakash has one more question. What is the
Yeah.
investment size in each fund?
So yeah, we can pull up that slide. A various fund will have different investment size. For example, Yali Deep Tech, we have committed 25 crores versus a Titan Capital Winners Fund where we have committed 5 and Atomic Capital where we have committed 43 crores. So depending on the fund manager, the allocation, the sector in which the fund is investing, and a few other parameters, the allocation, the commitment would be made.
Okay. Okay. Yes, I think so. There are no more questions. So thank you so much, everyone, for joining us today and making this session truly engaging. Special thanks to our speaker for sharing valuable insights on Singularity Funds of Fund and its investment philosophy, portfolio strategy, and the opportunity it presents the evolving private market. So I hope today's session has provided meaningful perspective and great clarity on how investor uh, can benefit from this opportunity. So if you have any questions or wish to further explore fund further, please feel to contact with the AltPort team. You can contact us on contact@allportfunds.com. So thank you so much again for giving your precious time. We look forward to stay connecting and welcoming you to our upcoming sessions. Thank you so much. Have a wonderful day ahead. Thank you so much.
Thank you. Thank you all.
Thank you, Shubham. Thank you, everyone.